Welcome to BTFDtv. This is Bob Lehman. I'm again joined by the inestimable David Cullum to discuss his year-end list. You'll note that I'm on this flash because for some reason my camera is not cooperating with me. I did reboot my system, showed myself a little bit, but I can't fix that now. So we're going to move along with this year in review. We're going to spend an hour with David. David does have, I've sent it out multiple times today, has his article out at Peak Prosperity, peakprosperity.com, his annual year in review. It's an excellent read. It's lengthy, it's funny, comical, and insightful. I greatly recommend it. I will again send it out after this little conversation. But I encourage everybody to read it. It's kind of become a must-read of mine, and certainly of a lot of people. David, I congratulate you on that.
Well, thank you, Bob. I enjoy these little chats we have. They've covered quite a wide range of topics over the years, and I kind of like the threesomes we've done with Eric Hunsader and Saluzzi and Grant Williams. I recommend those types. And then, of course, there was the infamous New Year's Eve Hexabox that went totally off the rails. And that was a legendary moment of BTFDtv that unfortunately was not recorded, but maybe fortunately. I don't know.
Well, I think in fact it was recorded. I think it was
buried?
Deleted. Yes, buried.
It was a toxic brew of characters.
Indeed it was. Indeed it was. Again, congratulations on your annual letter. I spent most of today rereading it again just to update my question list. You and I, you do have a detailed interview as well on Peak Prosperity that I did listen to quite some time ago, which is excellent as well. And I'll try not to be duplicative in our coverage, but I'll kind of leave it to you to drive where you want to go too. There are, of course, some world events that have occurred, in between the time you've written it and now, which I think may make this conversation ever more interesting.
Yeah, it could. One of the themes of the review was that the world is getting increasingly baffling. And sort of in the context of what's happening right now, if anyone who's been prophesizing doom starts doing a superior dance, I just have to remind them that every year, the start of the year somehow never seems to reflect the end of the year. And despite the claim that, what happens in January is so goes the year, I don't buy that. Every January, the metals seem to take off, and sometimes equities get crushed, and it's only at the end of the year that you find out whether that was just a head fake. Last year, Greece looked like the story of the year, and it came to this grand finale, and then it just disappeared from the headlines. So anyone who thought Greece was going to destroy the world was dead wrong, and or at least was dead wrong so far.
Right. Yeah, it's interesting. I mean, for purposes of this broadcast, because I'm only using one computer, my other one is updating to Windows 10 inadvertently. But the futures market was down already today again. We had 5 straight days of decline, our first 5 trading days of the year, which is fairly unique. What we're down over 6%, I believe.
So how far down is it? I've been out all day, and I tend not to look at the futures market. Where is it?
Last I looked, before I started scrambling around, it was down about 7%, 7 points rather.
I was going to say 7%. Very impressive.
Yeah.
Yeah. How about the Shanghai? Do you know what's going on there?
I don't know. I believe that opens at in about an hour and a half.
Yeah, that'll be entertaining beyond belief, right?
Yeah, futures will start. I don't know exactly what happened on Friday. I mean, I know what happened market-wise, but I don't know what happened internally. Kind of who were the buyers there?
Oh, you mean in China?
Yeah.
Oh, that was the authorities. That's beyond a shadow of a doubt, actually. So for the readers who don't obsess and compulse over these things, on Thursday the Shanghai market dove within the first 30 minutes and they completely shut the thing down. Right. It stayed down until about the last, what looks like about 3 minutes, and then it did this little upturn at the end, but it was a complete flat line. So, you know, the numbnuts would say, hey, it found support.
Yeah, right.
Right. Yeah. But the but rational individuals would note that they had shut down all the markets. And it was down 7%, 7 plus change.
Right.
And you know what, anyone who's watched markets and watched circuit breakers knows that there's nothing like shutting down the markets to make people want to sell even more. So this morning, and so Friday then the powers that be came in apparently with some pretty big buy orders to make sure it didn't go down again. But you know, that's like sandbag and avalanche zones, right? That's just, you're at some point. Well, I think physical science teaches you you eventually sort of head to equilibrium whether you like it or not, and the further from equilibrium you are, which certainly is, the Shanghai market was a long ways from equilibrium. It was a massive bubble. It will return with a vengeance. A lot of death and dismemberment. A chemist knows rapid return to equilibrium blows up your lab. So
fair enough. Well, yeah, in the real world, I guess you are a chemist, which
in
is
the real world. Yes, I'm a chemist about 14 a day, and a news junkie about 4 a day, and I do eat, but usually with a laptop in front of me. So.
Well, I congratulate you on this year's piece. You know, I think it's difficult to say this, having read, I guess, the last. Well, this one will make it the last 4.
Okay.
But I really thoroughly enjoyed this one. It is not a short read, but it's thorough, and you go into a lot of interesting topics. And the first one I wanted to touch on is on kind of a lighter note. Is one of the first people you mentioned in your piece this year is Barry Ritholtz, who is big on Twitter. And I guess you had a little interchange with him that was all.
Well, actually, that one didn't go off the rails. So where the interchange started was with this guy named George Perkins. I think that's how he pronounces his name. I think he's a very bright. And I made some comment suggesting, implying, whatever, that we might already be in a recession or that we were close. And you know, admittedly, an economist looking at a chemist. With some consternation about whether I have my head up my ass or not, said, and you know, go on. There was a kind of a snarky go on, and I said, well, there's a lot of indicators turning down, and then we got into a quick discussion, and he said, I don't think we're going to have a recession until at least 2017, and I said, I think we're in one now, and I think that when the bean counters finally do their bean counting, they're going to look back and say the actual top, the sort of negative trajectory, began. I think might have begun already. And if you go through the data for the year, whether we technically hit a recession or not, you know, if we technically did not, then Perkins is right, but also there were huge numbers of indicators that said we were in a world of trouble. So in that sense, I was right too. So maybe we were both right. But I had just come off reading, within the last year or two, Code Red by Malden, who I like. Right. And he referred to, this is a funny story, he referred to a poll of 53 economists in which it was some year, it was 91. And their collective wisdom said that there was a 3% chance of a recession in 1991, and which is stupid at a 0th order approximation, because statistically it's about a 15% chance in any year, and the business cycle was long in the tooth, and it turns out that when the NBER finally declared the recession, which is always after the fact. It showed that the economists were polled 5 months into the recession. And so these guys put a 3% chance on something that was already raging. And it's sort of like a plane crash, right? You're at 35,000 feet and you drop to 33. You don't know yet that you're about to crash and burn, right? But you're dropping. And so, so I think economists are particularly bad at predicting recessions, and I was willing to bet Perkins. And so then somehow later in the spring, Ritholtz, who I have a high respect for, his confidence is exceptional.
Well, that's certainly one way of saying it.
Yeah, and he said, well, what's your indicator? And my response was, well, a lot of indicators. I couldn't possibly defend what it was I was smelling because it's based on a dozen, 2 dozen, 3 dozen things that all just kept saying, you know, there's an odor coming from the basement, right? And that just it just fell on deaf ears at that point. In some sense, I don't blame him. That sounds like an evasive answer. So in some sense, I didn't want to pick on Ritholtz. I do respect the guy a lot. I sometimes think he's a bit of a barroom brawler. He's tough. He will fight back and not doubt his views. And you know, maybe that's me too, right? So.
Well, I don't know. I mean, you know, I have high regard for Barry. I do read his stuff regularly. I think he's a very bright guy, but he is incredibly dismissive of anyone who dares disagree with him.
Yeah, he hates gold bugs. I figured that out. And then he'll back it off a little bit and say, I was just saying X, but he writes pretty snarky, and at the same time, if you read my year in review, I shit all over everybody, right?
Indeed.
Right, and so you could say, well, Dave, what makes you different? And the answer is presumably nothing. I mean, I try to bring some humility in, and I try to bring humor in, so I try not to hammer people without at least, you know, a smirk. I don't know. But that's why I run into one of these stubborn guys, and it reminds me, don't be stubborn, right?
Yeah, I mean, I think that's really the point. It's disagreeing without being disagreeable.
Right.
I mean, that's my thing, you know. And I mean, I try to, you know, I've been on Twitter for quite a number of years now, and you know, have you know, well over 150,000 posts, and you know, you occasionally get into it with somebody, and I mean, I just try not to be disagreeable. You can have a different view. It's perfectly acceptable. Perfectly acceptable. Explain to me why it is that you think that way. That's all.
Right, and you know, was it a guy named Tony Greer who I really like? He writes this thing called Meatball Macro, and I think it goes out to 150 people. It should go out to 150,000 in my opinion.
Wait, let me get that again. Meatball Macro?
Well, but it's not on the web. He's on Twitter. His name is Tony Greer. You know, I met up with him, spent the day with him. He's just a pisser and a half. He's funnier than hell. You know, I grabbed quotes from him to put in my year in review. He somehow has this knack, and maybe someday write a book. But I can't remember where he's at now. He's moved a couple places. I think he was in Buckingham Capital at one point. And anyway, Tony Greer. You can find him on Twitter, and tweet me and ask me for his handle. He's unnoticed, right? At one point, Stockman was on Twitter. We talked about Stockman repeatedly through the years on BTFDtv, but he had about 200 followers. And I think people thought it was a parody or something, and so I emailed him and I said, is this you on Twitter? And he says, yes. And so I went out on Twitter and I said, I've confirmed that that's David Stockman. You're free to follow now. And there was a whoosh, right? All of a sudden, Stockman's Twitter feed started to pick up some momentum, but I think people just disbelieved it. Tony Deaton, who's a real smart money manager in Europe, had something like 15 followers. And if you looked at the 15, these guys know who this is, but no one else did.
Right.
Sort of lurking out there, and Twitter's filled with incredibly smart people. So if you get the right feed going, you're reaching out to the world, right?
Oh, undoubtedly. I mean, unfortunately, I kind of always am battling with who to follow and who not to follow. You know, I mean,
you feel like a douchebag not following someone, right? Anyone listening who I'm not following, I apologize. It's just your Twitter feed can become a blur if you don't somehow figure out how to clean it up. And there's one guy who follows me and I follow him back, and if I really wanted to use my time efficiently, I'd block him. but I sense he's kind of a fragile ego, maybe some diagnosable OCD thingy, whatever, and I just don't want to hurt the guy, so I just kind of let him throw bizarro posts at me.
I got a couple of those in my feed. Hey, one other thing that hit me in that first section was your mention of the Baltic Dry Index, and that's one area that I just just to be a contrarian here, I just wanted to bring up that I didn't necessarily, while I appreciate the data that you put up, and the data was correct, certainly. The index, the Baltic Dry, has dropped to the record levels, or near record levels that I know of anyway. But I think isn't that really due? I mean, sure, slowing demand, yes. Slowing shipment to China, yes. But those shippers built a ton of ships that I don't know what they're going to do with.
Well, so yeah, and in fact, the Baltic Dry Index, what's deceptive about it, first of all, it could just be evidence China's slowing. Now, astute market watchers are saying, yeah, if China slows, we're in trouble, because China itself is an indicator of global prosperity. Because if people aren't buying from China, then they're not buying, right? And so so that's one issue. The second issue with the Baltic Dry Index is that it has a ship count component to it. I can't profess real understanding. I can't profess understanding many of this stuff. I'm just trying to I'm painting my hands on cave walls here, right? But it also has a shipping count in it, and if you have a bunch of bigger ships every year, then there'll be a natural drag on that component. So, but if you look at it, you go, yeah, I don't care how many qualifiers you want to put on it, that thing's tanking, right? And so, so I think the Baltic Index is a qualitatively valid read. I think that the best indicators. There were a number of indicators that were flat out deeply in recession territory, and they were in recession territory by the end of 2014, which is why I sort of took that gentleman's bet with Perkins, right? And then there's indicators about market valuations, right? The three best indicators of market valuation all concur that a 40% regression to the mean is in the cards. And anyone who has mathematical skills above that of a sixth grader knows that you don't regress to the mean. You have to mathematically regress to the mean, or the mean moves on you, right?
Indeed.
So you define the mean by spending half your time on both sides. And so, people can't fathom the idea that what would happen if we spent a half a dozen or a dozen years below the mean, which is certainly possible.
Well, it's mathematically probable, right?
It has to occur, or the mean has to move abruptly.
Absolutely.
And we've been above the mean for a long goddamn time. So either the mean is moving on all three valuation models, the Case-Shiller, the Tobin's Q, and the Buffett price to GDP indicator. I'll say that Hussman is going to be shown to be correct, and all the guys hooting at Hussman and declaring he's an idiot just are at risk of looking like buffoons. They're at risk of looking like the guys who cackled at Peter Schiff in '06, right?
Well, this is where it all comes down. I think it all becomes a matter of timing.
Yeah. Well, see, I try to get time out of the equation completely.
Right. Yeah.
And that is to say that I have several parameters I play by. One is I never want to make a bet where timing is important. Now, let's say I got bullish on Japan in 1994. Timing was a disaster. So that would be a case where, look, timing was important and you blew it badly. But I would never make a bet thinking, okay, if I bet on Japan, it has to recover by X date or I got to get out. I would never make that bet. I would never buy an option, at least a short-dated one. You give me an option on something for 30 years, I might take it. In fact, some of these markets are more about options than actual ownership of revenue streams, I think. The other thing I won't do is, and I almost never change my portfolio. So for a guy who writes about markets as much as I do at the end of the year, I don't do anything. So people think I'm day trading. No, about once a year I might do something cute like buy a Russian ETF or something for 0.2% of my net worth. Right, there's a bold move. But and this is advice I give to everyone who's not a pro, and that includes, in my opinion, the pros. Is don't ever make a bet that you won't forgive yourself, and it's always a bet. But the things I invest in, I'm confident that if they go south on me and I get my ass kicked, that I'll be able to say, look, that was the best play you had at the time. The fact you got your ass kicked is irrelevant. So this idea that, you're wrong if according to price. No, you're wrong if you did something that your instincts told you don't do and you did it and you got crushed. And by the way, I made a 7-fold gain on WorldCom. Right? I bought WorldCom when it was called LDDS. Your readers can Google that one. It was a little broad bandwidth seller in Mississippi, and I followed it all the way up to the near the pinnacle, and I got out with a 7-fold gain. I got out in the mid '99, within 10% of its peak, and then it went bankrupt. And so they say, "Oh man, you were really right." No, in some sense, I wasn't, because WorldCom was a complete scam.
It was a Ponzi scheme, yeah.
It was a Ponzi scheme, and I didn't know it. I just knew that I didn't want to own any stocks in '99. That part I got right. That was the smart part. But if I didn't see trouble coming from across the board, I would have held WorldCom. And people saw WorldCom trading at a PE of 10 about 6 months before it went completely insolvent.
Yep.
And they thought it was a good buy, right? The dip buyers got crushed. So I was stupid for buying WorldCom. Now, the best analysis I ever did was I was looking for inflation hedges. I was looking for an idea. I didn't like equities at all, and I can't remember the date. Do you remember when this tobacco companies got sued by the states? You remember what year that was? Like '01 or something? '02?
Yeah, I was thinking '02, but
it was right in the depths of the first of what I think is going to be 3 huge corrections. So we did number 2 already. I'm waiting for the third.
Well, let's go over those. The first one was what, 91 or
no? The big 3 I'm viewing is 2000 to spring 2003.
Right.
I've said this on several podcasts, so I got to repeat myself at some level. I'm a believer in the 3-leg down secular bear. Now, can I document that? No, but my instincts tell me that it makes sense. I suffer narrative bias, Taleb's narrative bias, Kahneman's narrative bias, and that it makes sense. It's a great story. And the great story is that the first leg down after a huge run, which we had, 20 years of it, the first leg down, it drops a lot of price, but it doesn't do any damage to the psyche, because everyone says, oh, it'll come right back. So that was like the Great Depression, right? First leg down was a butt kick, but there was this spring back, right? The second leg down, which came in from '07 to '09. By the way, I saw both coming. A lot of people say, no, I saw it coming. Yes, we did. We saw it coming too early. Was I wrong? No. Some guy told me I was wrong for seeing it coming too early, and I sent him a write-up I'd done in '02 describing the subprime crisis. And he got back to me and he said, you were beautifully correct. The reason was although I was 5 years early, the analysis nailed the whole banking crisis. I've posted that online before. Right. And so I was 5 years early. Was I wrong? No, I wasn't. If you predict something awful and you're 5 years early, you're still right.
Well, the market can fool itself for a hell of a long time.
I don't care how long it took. I'm just telling you I saw a shitstorm coming. So I think there's a third one coming. And the third leg down model says the first leg is a flesh wound. You don't even know you got hit hard. The second one hurts, and that was 07, 09. And that was painful, right? That people really felt. And that shook a lot of people out of the game. And the third leg down is the one that rips out your heart and soul, right? The one that gets a generation to say, never again. You're not going to dupe me another time. And they swear off equities, and they curl up in fetal position and die, right? And that's what the next one I think is going to do. And I'm not willing to predict timing, but I wouldn't be shocked if it was soon, because we're kind of long in the tooth. I intend to start buying. I tried to start buying in '09. So when the Tobin's Q was at about the mean, I started buying, and it jumped right off that.
Right, it did.
And you know, I actually got to spend some time with Spitznagel in the fall. And I said, you know, we spent a month at fair value. I'm happy to buy at fair value. I don't need to buy super dips. So I started buying. I was buying tobacco stocks. And because I had a huge amount of cash, I exited a bear market fund that pocketed 30%, one of the rare negative bets I've ever made. And I started buying, and then within a month, the thing jumped. And I thought, no, this is a head fake. Well, it head faked for the next 7 years.
Right. Well, let me just point out that David does spend a lot of time discussing just this issue that he's discussing right now. Basically, everything we've talked about to date has been part of your write-up. So
Right.
I just want to point that out to people just who are watching who have not had the opportunity yet to read it.
Yeah, well, and you know, by definition, almost anything I talk about now, I wrote about, because if I care about it, I wrote about it. Right? It's 100 pages. I just warn the reader, it's 100 pages, but there's some phenomenal, you know, and every year I say, never again, never again am I going to write this thing. But then all of a sudden, you know, I get hundreds and hundreds of emails from guys that your listeners would know. Some of them are just Joe Sixpack saying, you talked to me, right? You told me what I was smelling, what I was sensing. I've had, you know, Wall Street hedge fund managers saying, you know, I don't send emails like this, but I just had to send you one. I know massively prominent guys who had it read within 2 hours of its release, you know. So there, you know, there's 100 people in the world who read it who are enough to get me to write it again. And so.
I mean, you know, again, I opened this broadcast by saying this, David, but I thoroughly enjoy it. It is really well done. It's got a lot of humor. You do laugh out loud in reading it. I mean, you know, I many times throughout the entire piece, it's funny and it's very salient. And if nothing else, even if you disagree with your points, you will think. It will cause you to think, and that's the important thing.
So here's a funny story. One of my former students, who's a professor at Harvard now, told me in an email that he was voting for Hillary. And I sent him my review, and I said, just read the Hillary section for those listening. I take a bat and a nuke and everything a rake, you name it, the back end of a shovel, and I put it to Hillary's sorry butt. To me, Hillary is a despicable human being who ought to be in prison. And I've never felt that about a politician before. I don't care about Sanders. I don't care about Nader. I don't care about Obama. I think Bush was an idiot. I think Bush Sr. was good, and they didn't even reelect him. But Hillary, to me, is a criminal of a higher order. And he read it, and he emails me back. He says, there's no way I can vote for Hillary. And so that was really, you know, one vote. I helped chalk up one for the good guys on that one. I think Trump is a response to douchebags like Hillary. I think.
You know my opinion of the political system, and Gmail Jane is right at the top of that list.
But it's not just her Gmail. It's actually a string of criminal activity that goes back decades and profound levels. So if you want to read just one section, go read the Hillary section. It's at the very end. And you know, so far I've gotten no attacks. I thought maybe the feminists would come out of the woodwork and beat the crap out of me. At which point I'd go to battle. By the way, you know, that famous New Year's Eve one we did that caused some trouble with Miss, you know, Big Tits and in 5 o'clock shadow. Interesting combination of physical traits. I got into it with some feminists after that one even. It was really interesting.
I think somehow I dodged that. But anyway, let's move on to another area that I really thoroughly enjoyed your insights and thoughts on, and I'd like to explore it a little bit more, is China. And there have been a lot of events since you wrote your piece. I believe you quote in your piece this year, Societe Generale, in saying that them predicting that they were predicting a 30% correction, but 60% if China hits a snag. And
yeah, well, actually, they were predicting a 30% correction in other markets, and then they said, but it could be 60 if China hits a snag. And I'm going, oh, China's going to hit a snag.
but it appears that they've hit such a snag.
Yeah, this is classic stuff. So one of the interesting observations that I don't know if I made it or if someone drew my attention to it, I think it was a combination actually, where you look at Japan from 1945, which was the very beginning of the new era of Japan, to 1989. That's a 44-year period. And then 89 was the blow-off top of the growth of their capitalism. I pointed out that China's sort of seminal moment was when Nixon went there, when sent Kissinger there in '73. You add what is it, 49 years to, I think, no, 44, do the math, 40-something years to 1973, and now China's in a blow-off top. And someone pointed out that the U.S. had a huge immigration from 1880 on, and that was our sort of industrial revolution with a huge demographic shift. And by the way, 49 years gets you to 1929.
Right.
And so I realized, and then I remembered Ray Dalio saying that the business, that the credit cycle was about a 40-year cycle. And I go, wow, that's kind of cool. And so I'm thinking China has now hit its come to Jesus moment. It's not to say it's going to go down and permanently, but it is to say that I think it's going to go through a generational sort of shakeout, which will, there was a Zero Hedge article this week, I don't know if you saw it, where they built the building, 27-story high-rise. They completed it in November, and they just demoed it. Right? And there might be a backstory, like something went wrong, who knows what. But how you could decide to demolish a building from November to January, right? I don't think there's I don't even think you can plan a demolition on those timescales. Maybe the Twin Towers, who knows? But that was a joke, sort of. So China, that might, now Zero Hedge's spin on that is that it's a kind of a Keynesianism. They said, look, we're going to blow it up. We're going to do a Bastiat's broken window moment, although Bastiat knew don't go smashing windows. But right. China decided they were going to smash it and rebuild it and hire Chinese guys to do it. Now that's just stupidity. That's Western capital. That's Krugman thinking, right? No one is more qualified to think clearly and less capable of doing it than Krugman, in my opinion.
Well, I think one of the understated things, and this was something I found underlying a lot of your discussion of China, although you didn't. I mean, I think underlying it all, I think they have an enormous political problem there. Oh
yeah. I mean, I don't go near the politics of China because I don't understand it. This year was intensely geopolitical. Every year, of course, there's geopolitics. But some years, for example, there's years where it looked like the markets were the headlines, right? This year was geopolitics. And it's just inherently harder to understand. It's inherently to write a narrative that you can even, delude yourself into believing you understand. And so China's politics I wouldn't go near. Their banking system's a mess. And their overdevelopment, it's kind of a state capitalism, not unlike ours, but and they've just got a lot of indigestion coming, right? I'm willing to give them credit for the I think they may have the capacity to dig their way out, but I think it'll take a decade. I think it's not going to be just some stock market correction. I think they've got severe problems. The scary thing about China is the one-child policy has now produced a bunch of 20-somethings in large excess, right? This is not a 52-48 excess. This is 15% excess males over females, right? Those guys are sexually starved, horny bastards, right?
Yep.
And that's the great makings of a standing army. Would you want to go up against an army of guys who want to kill you because they haven't gotten laid, right? That would be bad.
Well, a little bird makes a point that I think is very salient right now.
Is Jack lurking back there?
He is. He's kind of lurking in the shadows. He doesn't have a computer that has a microphone apparently. But
tell him to invest. Tell him to splurge. Hey, Jack.
He can hear you, but he can't.
I know he can.
But anyway, he points out, and this is, I think, an excellent point about the huge money flows out of China recently. And
Yes.
I mean, I remember reading pieces in late 2014 about this already beginning. People buying up all types of property in not only the U.S. but in Australia, Western countries primarily. But the outflows have just increased to an astronomical level.
And it's creating bubbles here.
Indeed, it is.
Right, and so it's possible, for example, that I could almost say probable, I could almost say guaranteed, but I would just be winging it. But San Francisco's real estate market's gone nuts. I don't think it's a coincidence that they're the ones closest to China, right?
Yeah.
and with a big sort of Asian descent population. So yeah, I think in the art market, I think the Chinese are probably buying. You saw that $58 million
That's a beauty.
that I call fat German chick on sofa. I was actually going to be more profoundly disgusting than that. I was going to refer to some stain on the sofa, but I didn't. And that that $58 million, that piece of garbage. It turns out it was by Freud or someone. It might have been a famous person.
But I don't know. Well, the middle one was the one that captured me.
Oh yeah, so it was a geriatric walker with an American flag draped over it that sold for $1.5 million.
That seems reasonable to me.
Yeah, you could have put that piece of art together at Target for about $50.
I was in at 1.45 and I just couldn't get it. I got outbid at the last minute.
Yeah, it's amazing. Yeah, I chased it up to around 1 and then quit.
Let's move to another area that I think you have some wonderful points on, which is just the growth of corporate debt, which is, I think, is just the outgrowth of these.
And by the way, here's the newest family member.
Oh, what's that,
sweetheart?
What's her name?
That's called Maisie. She's about 5 months old. She's got she's sweet as hell, but she's got the mind of a serial killer. She somehow got out and joined me here, so I thought I'd let you know in case it starts getting weird on this end.
No problem. I mean, I have two puppies, one that's 6 months old and one that's 4 months old. So they are a challenge.
They are a challenge, yeah. It's like, Jesus Christ, I was done having kids and then I went and did this.
Yeah, right. Believe me, I say that every damn day. But anyway, let's move on to just corporate debt, which I think is an enormous issue. And you go on in your piece not only to talk about the numbers and the causes of it, which are kind of self-evident, but also basically what they've used it for, which they're just doing stock buybacks. I mean, you quote numbers from your piece that in 2009, corporate debt, I believe this is in the U.S., was $2.6 trillion. It has now moved to $5.8 trillion.
Yeah, it's pretty big, isn't it?
Unbelievable.
But the other interesting thing, I have these little epiphanies, and some of them are tiny, but I sense that they either have an original component. They're certainly not something I read, but something I came up with. In some cases, I actually think they're not being talked about at all, but in other cases, I'm sure they're being talked about, but I'm not reading it. But I realize that when you're using debt to do share buybacks, you're doing a leverage buyout. And then what's happening is essentially you're selling the company to creditors.
Yep.
And so in the limit, and this is a really important thing, is in the limit, let's say you just kept issuing debt to buy the company, right? This kind of is a Milken-esque moment, not quite, but you get the idea. As you bought up the last shares, those last shares in theory represent ownership of almost nothing.
Right.
You don't own the whole company. Your creditors own the company.
Right.
And what it means, therefore, is that, so let's say you bought up a company with $1 billion of revenue, of earnings, and you were the last share, then in principle your PE ratio, your earnings is $1 billion. So do you bid that share up to $10 billion? No, you don't. In the limit that you do a leverage buyout, the limit that you use leverage to buy back shares, the PE ratio should shrink in proportional to how much of the company the shareholders own compared to the creditors. And as a consequence of that, but they're using it to dupe investors. Investors are being told that, oh, PE ratios should stay the same. No, they shouldn't.
They can't.
Well, they won't either. So the share buybacks are scam. The other thing, I show a plot of it. Some senior VP at Morgan Stanley emailed me and said, "How do you get permission to use the graphics?" I said, "I steal them." I said, let everyone else worry about that. If you don't put your logo on the graphics, you put it on the internet, you're an idiot, right? And I don't think she was quite expecting that answer, but I grab a graphic from someone, probably Zero Hedge, right? I could live at Zero Hedge all day. These guys need a hat tip. A lot of people hate them because they fight the system pretty good, but they're just not that wrong. When they go pretty wiggy sometimes, then about 2 years later you go, holy crap, they were right. I can't believe it. I am so stunned at how far ahead of the curve Zero Hedge is. And there was this chart of corporate buybacks, and that correlates rigorously with overvaluation. So the corporate buybacks reached an apex in 2007, and then the market tanks and the corporate buybacks dropped to a sort of an almost all-time low in 2009, and now they're back to an all-time high again, right? So it means that they're probably driving the share price. That's the claim. Some people say that a third of the buying power is corporate-driven buying. I don't know how you measure a third. What does that mean? I don't know, but I'm willing to think of it as metaphorically, at least. What it also means that the corporate ding-dongs who are buying up the shares are buying at precisely the wrong time. So they're idiots or criminals, which I'm willing to think that maybe it's a dose of both.
Yeah, I mean that's therein lies the rub. I mean, and you also, another I thought very important point that you brought out in your piece was that buybacks really benefit insiders. Dividends don't.
Yeah, I think that gets talked about quite a bit, but the average person maybe hasn't synthesized that idea together. So it turns out that if the company pays dividends, essentially they're giving away some of their book, or giving away some of their balance sheet to the shareholders. And to the extent that and that therefore decreases the price of the share. Mm-hmm. And you can see it. This is not just a hypothetical. When some company is going to pay a dividend, a 3% dividend, let's say a one-off, the share price drops 3% the day after, as soon as the dividend gets paid. And so what happens, however, is that the average Joe doesn't realize is that as they use share buybacks to jack up the price, rather than pay a dividend, that's a way of making sure that the company's share price doesn't get dropped, and therefore the options of the executives don't get dropped.
That's exactly right.
And so I think I mentioned it's a bastardized version of a Peter Lynch model from the 70s.
Well, in a former life I was a tax attorney, and for large corporations.
Do you still have the ankle bracelet, or is that now off?
No, it's not. They finally removed it, but. The tax code, the U.S. tax code is an abomination. And, of course, the politicians in Washington don't know anything about it to begin with, don't want to know anything about it. Basically, it has gotten to the point, and this is not a recent vintage, this is over years, that since the mid-'70s, basically you've had lobbyists writing the legislation and enacting it. So it's an absolute disaster.
And lobbyists have written legislation for everything at this point, right? I mean, what's that lawsuit, Citizens United, that basically said you could give unlimited amounts of money as long as you checked a few boxes?
Yeah, well, as long as it's to a super PAC. Although, there is some consternation as to the utility of these super PACs. What's extremely notable, and this kind of vectors in with the current campaign that's going on, is the Koch brothers, who have a very large super PAC, have basically spent none of it. $0. They won't give it out.
Well, if they're not spending it, at least it's not doing damage yet. There are super PACs in every direction, so I tend not to separate out the Koch brothers as the sole evil dark lords of.
Oh, no. I'm hardly saying that they're the dark lords. I was merely pointing out that what's interesting, while you have all this money slushing around, the Jeb Bush super PAC apparently had $100 million plus.
Yeah, that worked real well, didn't it?
Yeah, extraordinarily, and they look damn sure willing to spend it one way or the other, come hell or high water. But according to sources, and of course they don't know the numbers, but the Koch super PAC apparently had about $500 million in commitments, and they haven't spent a dime. And
again, here's the great risk: is with this opening of the financial floodgates. It's kind of a financial analog of the Syrian refugee crisis, where there's no obvious mechanism to undo it.
No.
And because you can now donate unlimited amounts of money, you can also donate enough money to shut down any possible vote that would curb it. So we have one hope, and here's what our hope is on this unlimited flood of money that's corrupting our political system profoundly, possibly representing the beginning and the end of democracy, even as we know it, let alone what the founders thought it ought to be. And that is that once in a great while, the Supreme Court chooses to listen to a case with the idea of undoing a decision. They pretty rarely back off on decisions. I read a book on the evolution of the Constitution. The Constitution is not what the Founding Fathers said. That literalist approach is nonsense. It turns out it's the sum total of all decisions, all opinions, all documents that are submitted, the whole enchilada.
The whole Megillah.
All of them. It's the sum total of all wisdom that's accumulated over the years that's in that written record. And I think, and it's rare that the Supreme Court reverses a decision, but they could pick a case and use it to reverse the decision, to let the money flood in the way it has. I would like to think that somewhere on the Supreme Court there's enough guys who actually have a loftier view of the world. And I have greater faith even in some of these guys are pretty partisan, but I have this faith that when you're at that position, you're probably trying to figure out how to get it right.
I believe in and I have at least a little bit of access to such types of people, let's just say. But I think you're absolutely correct. I mean, these people tend not to just be result-oriented.
Right. So Scalia gets a lot of negative attention, but I actually think Scalia is attempting to get it right. Now, I've never been too critical of people who I thought were trying to get it right, left or right wing. Doesn't matter. Jimmy Carter was a lefty. Jimmy Carter tried to get it right. History is slowly but surely rewriting his chapter. And his chapter is one of bad circumstance, I think. And I think the Supreme Court falls in that category. That's where I put it.
I think you're correct. I mean, again, not to belabor it, but I agree with you. I think it tends to be very good men and women who believe they're doing the right thing, who tend to be extraordinarily smart people and bright people. But sometimes don't recognize what the ultimate result of their decision will be. And
that's right, and that's when they would consider reversing it. So if all of a sudden some case comes up and they redecide it in the reverse direction. The other thing is there's cases that for which the cases got interpreted more literally than the judges intended. I'm trying to remember the one, but there was one where one of the judges put, the guy writing the final brief, whatever you call it, and he explicitly stated that this should not be viewed as precedent. And one of his clerks, someone found this rough draft in his drawer when he died, and it turns out one of his clerks deleted that.
Huh.
Right? and it sent us on a course. I wish I could remember what case that was, but it was one that seemed important to me at the time.
Yeah, I don't recall that specific incident, but it doesn't shock me.
I asked one of Ginsburg's cronies, one of her clerks, which I hesitate to call clerk because it's a profoundly consequential person who happens to be working as one of the heavy lifters for the Supreme Court justice.
They are indeed heavy lifters.
Right. He's not just sub-secretary. He's
No,
in our.
not
I
even
asked,
close.
does the Supreme Court ever knowingly ignore the Constitution? And he said they don't admit it. And I said, well, gold standard, for example. He said, yeah, that's probably the most textbook case that people like to bring up because they were willing to essentially take us off the gold standard and let it happen, even though the Constitution's pretty explicit about gold and silver. So, but I think there's other cases where they act as social engineers a little bit.
I think, unfortunately, that is the case. Much to my own consternation, you know. I mean, you can go back and point to a whole bunch of different decisions. You know, we're kind of starting to run a little low on time here, and I thought just as a change in circumstances, you do have again, as you mentioned earlier, a little bit of political stuff in the second half of your piece this year.
Right.
I just kind of wanted, I thought it was interesting. You and I tend to have very good political back and forth. Get your read on the current election cycle on either side, if you like, and just thoughts going forward.
Yeah, I did write about that. I'm growing increasingly weary of both parties choosing candidates for us instead of us choosing candidates. So I had this epiphany actually after writing the goddamn thing, that democracy is essentially the wisdom of crowds. And anyone who's read that book, who has not read it, I recommend you read it. It's this idea like in the Want to Be a Millionaire, where when you ask the audience, they get it right almost every time. And so there's a whole book written on that idea that a collective wisdom of a crowd, which the voting is uncorrelated, is very good. And so it turns out democracy is wisdom of crowds. Although no one person knows what the hell they're doing, collectively we get it right. And the two parties are subverting that. So I think this year represents a paroxysm in the political system that's rejecting the attempts to control democracy from the halls of power. So you got guys like Bernie Sanders. You can say, well, he's a Democrat. But he's not the Democrat that the Democrats wanted to have up there. And so his run this year has been much bolder than I think people realize. And then, of course, you got Hillary, who's a classic sort of political crony of a higher order. But then you got Trump on the other side, and I'm pretty sure Trump is as shocked as anyone at how well he's doing. I'm also quite confident to the extent he intended that just to have fun. Now that he's leading, he's playing for keeps. I don't think he's going to step down. They might find a way to take him down, and I'm going to be watching that carefully. But if for some reason he gets deep sixed, like Howard Dean, but on steroids, Ron Paul, they'll try to take him down. He's not going down easy, though. So I'm really intrigued by Trump. Trump could be the next coming of the apocalypse, right? Nazi Germany analogies run rampant. But I like the fact that he's in there because he's really stuffing it right up dark places on the political establishment. And the message to them is, if you insist on destroying democracy, we're gonna burn down the goddamn system.
Yeah, I fully agree with you. I laughed, and I did it on my Twitter stream quite a bit at just every time there was. First, it started with the McCain comment. War heroes are people that don't get captured, or whatever else it was. But a whole host of things. He's had about 6 different incidents where the political press has declared, oh, he's dead. That's it. And that's not it. That's simply not it. The people have had it. You have a legislature, which is supposedly a co-equal branch of government, that does nothing.
Well, to the extent that he has a political barometer that guides him, he is what makes him so interesting is that he's using it and then otherwise unfiltered. So, for example, he's out there saying, get the Muslims out of here, right?
Right.
And that is so unpolitically correct. But I know people who are fairly left wing who sort of in behind closed doors will say, "Jeepers, it's not obvious we should bring a bunch of Syrians into the country right now, right?" These guys are angry people from a country that we bombed and destroyed, and boy, that mayhem in Cologne, it turns out it looks like it was organized, that New Year's Eve mayhem,
Yes.
that rage or whatever they're called. And so Trump's up there saying, "Yeah, get the goddamn Syrians out." And it sounds appalling to people, but what it is it's kind of hitting the heart of America, where some guy's sitting at the bar going, "Yeah, god damn it," right? And Trump is unfiltered. And so he's not gonna do some PC thing. He's just gonna say it. And that's what's blowing away the establishment. I'm appalled at the media's attack on Trump. I dissolve the goddamn media, except for the fact that I'm really into free media. So, but I think I talked about Pedro da Costa getting yanked out of the press conferences for Bernanke because he asked, not Bernanke, Yellen, because he asked tough questions about criminal behavior. He's gone, so Free Pedro campaign.
They fired him that day, didn't they?
No, it turns. So I was talking to Pedro behind the scenes the whole time, and at the time I was thinking, "Oh, this is fantastic. I have to find out what the hell's going on." And so he's telling me about how it played out. It played out the day of the next press conference. And his editor basically came and said, "You're not going." And I knew what Pedro was up to after that, but it wasn't in the press. I knew where he was headed next. I knew the storyline. Mm-hmm. What I didn't understand was that my interest and my willingness this is really an interesting message. I was out on Twitter banging on the Wall Street Journal saying, "Grow a spine, Free Pedro. This is what defines you." And I was like tweeting all day. I was so mad at this.
Right.
And I didn't realize that Pedro says that made me feel so much better that day. And I'm just one stupid guy.
Right.
But he felt abandoned, and then out there's the Free Pedro campaign drum being beaten, and so you can make a difference, right? Pedro appreciated it, and so I've got a friend.
Yeah, who's the guy? There actually is a Twitter campaign, not terribly dissimilar. I mean, it's a totally different situation. They removed the blue check mark from some guy.
Yeah, I missed that. I caught a shard of it. I didn't know what I was catching.
Yeah, I forget what the guy's handle is. It's an interesting handle. I follow him. He doesn't.
Well, there's a guy who got banned from Twitter for a couple hours. Who's this fairly effeminate gay man, and I don't know what he said, but I think Twitter might have banned him for being just too provocative or something. That's the only thing I know of.
I don't know. Twitter seems like a Stockholm long term, huh? Sure.
Well, Twitter's an amazing thing. I mean, Twitter's not just about showing pictures of the steak you're eating at that moment. Although there's a lot of those. Twitter is I've never finished that story. Tony Greer once said, yeah, I understand Twitter. It's a waste of time. Who would ever want to talk with the most connected, insightful people in the world?
Yeah.
And that's really amazingly insightful. And that is that I can get to Barry Riddles. Explain to me how I would chat with Barry Riddles any other period in history. And I've had exchanges with people that go all the way from central bankers to Roseanne Barr to just ridiculous range of people. And you won't necessarily get to have a conversation, but the chance is there, right? And I first discovered that when I hammered Henry Blodgett for something, and he answered me. I go, "Holy shit, he read that?"
Yeah, right.
I go, "Wow, I didn't expect that." So that was my first day or two on Twitter. I'm going, "Holy crap, I didn't realize this was two-way."
Yeah, it's a marvelous machine. I mean, I've tended to be a little more circumspect on it of late, rather than just raving on about.
Well, I try not to hammer people.
Right. I never do.
In fact, if I hammer Krugman, I don't tag him. I mean, I could put his name in there and tag him. I don't want to get blocked by Krugman. I like to read the nonsense spewing out, right?
I completely agree. I mean, I would say fully a third to 40% of my follows are people that I entirely disagree with.
Right.
But I learn from them. I mean, anybody that engages in reasonable discussion or argument you always learn more from those you disagree with.
Yeah, and there's guys who I don't follow because we'd be in an argument all day, but occasionally I drop in and say hi and ping them, and guys like the one who jumps out of me. Mark Dow, he comes from a very different, but he's a smart guy.
Yeah.
But when he and I get into it, it can go for hours. And it's usually late. I'm exhausted. The guy who really does it to me late is David Andolfato of the St. Louis Fed. He's a smart guy.
Very smart.
Die-hard Keynesian sort of thinker. So he's on the opposite team. But he's civil, he engages. He's the vice president of St. Louis Fed, and he's out there chatting with a chemist, right? And we'll go at it for an hour and a half, 2 hours straight, and I'll be running out of gas, right? It'll be 1 o'clock in the morning, my time.
Right.
And I just don't have anything left, and he's bombarding me with pretty goddamn good arguments, and I'm just on the juice. And then we do some email stuff. Sometimes we go long form via email, but I love Twitter. It reminds me of the old chat boards I used to go to back in the late 90s, with the Prudent Bear Fund and stuff. I always thought, where would I be if there weren't guys I could chat with?
Right. I mean, for what it is, Twitter is just incredible. As you point out, I mean, in fact, I think you mentioned him as one of the former Fed buyers of bonds, Eric Hunsaker.
Hunsaker.
I'm sorry?
Hunsaker.
Hunsaker. No, not Eric Hunsaker. No, this guy worked.
Andy Huzar.
Yes. We actually had him on one time.
Andy's a good friend. Andy's another guy. I stayed at Andy's apartment in New York City. I went down there to watch him debate Simon Johnson on the merits of QE. We stayed up till 3 in the morning talking.
Wow.
And we spent time together in Vegas. I hooked him up with the Porter Stansberry group, and we both gave talks in Vegas. And we spent a lot of time there. Went to Cirque du Soleil. Andy's a sweetheart. Andy's one of those guys you want to give him a goddamn hug. What a nice guy.
But as you point out, I mean, and that's for everybody, I think, to learn from. I mean, there are such resources available via Twitter. If you're civil to other people, most people are civil to you. I mean, let's put aside Timestamp Joe. But anyway, I
even Jack is a nice guy. Jack, I know that you fake it sometimes, but
he's on a long-tailed break from Twitter, so he's really been quite good about it. But we certainly miss him, and he is loved.
12-step program.
Yeah, something like that. Anyway, David, I'd like to thank you so much for joining me. I encourage anybody that watches this or currently or watches it later to please get David's piece. I will be tweeting it out after we're done here. It's at Peak Prosperity. It's his 2015 year in review. It's a marvelous read. It's insightful. There's lots of laughs. It'll make you think. Whether you agree or disagree on any particular point, you will learn something, and you'll do no worse than hone your argument. So enjoy that. And again, David, I thank you so much for taking the time to spend with us.
I appreciate it. Always fun. We should do this more often, even if just by phone.
Great. We'll definitely do it. We'll definitely do it again here soon. We have some interesting market forces going on. Maybe we can talk about that in a month or two, something like that. Yeah. Sounds good. David, have a great night. Good night, everybody. Thank you for joining us. Bye now.